I don't think about exits. If you're thinking about exits, for example, I posted something on Twitter about this. If you have an exit slide as a founder in your pre-seed deck, that is a huge red flag. You should not be thinking about exits. You should be telling me how you're going to build an incredibly valuable business. The exits are going to take care of themselves. And, people that were investing based on certain exit multiples have always had a problem. I didn't invest in any of these B2B, SaaS companies in seed that were, raising at 100x revenue. Most of the guys who did that got crushed because public markets are 6x revenue. And the exit values of these things are going to be change over time based on the public markets. And, whether you have public markets at all, or whether you have big companies that are doing M&A at all. And M&A, big M&A in the US has gotten, cold water thrown on it by the government and stuff like that. So exits are always a problem. I don't, in pre-seed, think about exits. I think about, can you build something that customers will pay for, and can you raise money for the next round? And can you get to profit? I am thinking about how you get to cash flow break even or profitability much sooner. I want you to be close to cash flow break even into Series A. And I want to have a reasonable path to get there. Many in the bubble in 2020 and 2021, people were like, oh, you don't have to be profitable until the IPO. It's a very good thing for the overall startup ecosystem that people are expecting you to get to profitability sooner, because once you're cash flow break even, you don't have to worry about exits. You just have to run the business. And I think it's a benefit to the overall system that there is a more focus on being capital efficient. All of that said, those rules are out the window in AI right now. We're still in crazy times in the AI companies, people raising $1 billion seed rounds and stuff like that. I unfortunately don't think that's going to end well.